on. We'll get back to the sell-off we're seeing with the NASDAQ again, down almost 3%. One factor in that is Tesla shares. They're tumbling today, having their worst day since January on a big earnings miss. On the call last night, CEO Elon Musk, he stressed the importance of autonomy and said that non-believers in that should just sell their shares.
The value of Tesla overwhelmingly is autonomy. These other things are in the noise relative to autonomy. So I recommend anyone who doesn't believe that Tesla will solve vehicle autonomy should not hold Tesla stock. They should sell their Tesla stock.
Some sharp words from Elon Musk here. Let's bring in shareholder and halftime committee member Bill Baruch. He joins us over the phone. So, Bill, are you a believer?
I am a believer. And, listen, if the EPS miss yesterday was a surprise to you as an investor or a watcher, then, I don't know what to say, because it's absolutely not a surprise here. I mean, if you own this name, you've got to expect some volatility. The numbers on auto revenues and margins, it's a wake-up call to those who expected otherwise and expected an automaker here. And if you're looking for an automaker, it's a very cyclical business. It's not a terrific environment right now. But Tesla's not an automaker, and as Elon Musk alluded to, it's a tech company, it's a software company, it's an AI company, it's a renewable energy company. So I think the stock price, it turned a corner at the start of this month for a number of reasons, not just the robotaxi event that was then delayed, but there's China momentum, and I think the earnings call is a harbinger of things to come. A couple quarters ago, the call underwhelmed, and this is not the case. Even Kramer this morning pointed out how great the conference call was. So where to now? Yeah.
Let me ask you, though, you trimmed your Tesla position just a short time ago, so now are you buying more now after this?
No, I'm not buying more right now. But what I said, a couple weeks ago, the trade worked out very well, very quickly for us. And we had owned the name in sort of the bottom 5, bottom 10 of our stock basket, about 35 names. We ramped it up at the end of June in the mid-190s. Now, we cut 25% of it at 250. And at that time, even on the show, I said, listen, the name is likely to come back in. I want to see how it responds to 200, to 215. So today, from a price perspective, I do not like seeing it really going below this 215, 220 area, because there's a trend line from the all-time high that it broke out above, and it is now back below that. But you have the 50% retracement from this year low, and you have the 50-day moving average, both at $200. So there's a lot of support here.
You're sending some mixed messages here. You're a believer, but you're not buying more. You trimmed just a short time ago. What are you so excited about? I mean, we did get some details about the robotaxi event. It's now October the 10th. We did get some details about the quote-unquote $25,000 Tesla, first half of 25. Also, the robots sometime in 26. Is there one of those that's getting you excited? And if you're excited, why don't you want to buy more right now on this dip?
Well, I don't think you need to react and buy more just because the stock is lower. I want to see how it reacts to 200. And as a trader and as an investor, I position it. I think sizing is my superpower. All else aside, I size positions properly. I look at the portfolio, and I know how to manage things. Trimming Tesla at 250. Or not allocating CrowdStrike to new monies that came in when CrowdStrike was at $350, $380 is a skill that we lean on. So when you have this market a stock like this come down, it's more about watching it and seeing how it reacts to these price levels. And that's what I'm going to see as the week evolves and as the week closes out. If we surrender $200, as I said on the show, Josh and I discussed it a couple weeks back. If it surrenders $200, that is when I would be worried. So let's see how it closes this week out. And if we hold 200, a lot of support there, then maybe I'll be looking to reposition and add some more at that point.
All right, Tesla shareholder Bill Baruch. Tesla shares down double digits right now on pace for their worst day since January. A lot of people give me some eye contact while Bill was talking. Joe, I'm going to start with you.
Yeah, look, I think the reality of what's gone on here with Tesla is they had some good news in the middle of June, and that began the process of some short covering. I think more than anything else, what you could attribute the significant price appreciation in the stock over the last month is momentum. Pure and simple. I think the do-it-yourself crowd got back, re-engaged. A lot of the same-day zero-dated options. You saw strong participation, strong volumes there as well for Tesla. So I don't know if there's anything overwhelmingly compelling when you're looking at the fundamentals. I'll absolutely acknowledge the technical setup is still a strong one. It's lost a little bit of the momentum, but let's call it what it is. I think the last month is really a momentum-driven price spike.
Yeah, when you look at the earnings, Anastasia, I know you were kind of looking at me as well. Big miss on gross auto margin, key for Tesla. That's really where they have the advantage of other automakers. But do you think this is about Tesla or maybe just this Mag 7 trade, which Tesla still is a part of? People try to kick it out, but still part of it. Is there fatigue there?
Yeah, I think it's about people wanting certainty. And when I look at a stock like Tesla and all the moving parts that it has, there's a lot of uncertainty that is surrounding stock, especially heading into the election year. And again, when you look at the stock, you've got the electric vehicle business, which again is kind of thrown into some uncertainty depending on who's going to win the election. You've got the energy storage business. I think that did pretty well. But what happens with some of the credits and tax breaks that you get from that? And then lastly, you've got the automation part. But when does it actually happen? When does it actually going to start to matter to the revenues and earnings profile of a stock like that? So I think at this very point, investors are focusing on what they know and the certainty that they have, especially, as Steve mentioned, in an economic scenario that is decelerating. And to go back to the point, what happens to stocks after the Fed cuts rates? Well, they trade defensively. Not only do they consolidate, but the defensives actually outperform. So I think all of that right now is going against a stock like Tesla.
Important note, a Fed rate cut would also help Tesla. It would reduce the cost of buying the cars, potentially help and also free up some money for consumers in other areas.
Right, but here are the issues I see. Fourth consecutive quarter they've missed. What that tells me is that they don't have a grip on their own business model. In terms of the robo-taxi, in terms of all the other promises, the cheaper car, those just be putting on delay. So if you take the name Tesla off this company, and if you take Elon Musk, who is just a tremendous, inventor, entrepreneur, you'd be short this stock because I see a valuation of $800 billion, 758, and Bill is a great technical trader. That's also his superpower. If I see a stock that I like at 250 and it's at 200, I'm thinking of buying it, not thinking of selling it. So I have a different perspective. But here's the point. I look at stocks and I analyze what are the future cash flows and what is the probability of them being realized and what multiple should I put on that. I defy anybody who owns Tesla to be able to determine that because of the uncertainty in the political environment, because of increasing market share losses to other EVs, because those credits may go away both in their energy business as well as their car business. And then I take a look at autonomy. They are not the only ones in autonomy. It's full. Waymo's been in robo-taxis for years and years, right? So I just think it's, I'm not going to say quite a house of cards, but this valuation is not deserved. One more point. Bryn Talkington, she and I had a spirited debate at 150. She was 1,000% right. See the stock go from 150 to 250 in that period of time is incredible. Difficult to repeat that. So I'd just advise taking profits.
One other thing I would mention is you have to continue to watch what the competition's doing on pricing, because that's impacting Tesla. They can't avoid it.
Especially in China.
Yeah, and competition is clearly lowering prices. That's something that's important to gauge over the coming quarters.
And do you want to tie your fate as a company to China?
I think it's a question Elon Musk is trying to figure out today.